Since then, we've developed into an uptrend. So the market doing well today. We weren't off to a very strong start this morning, but we improved throughout the day. So if we have a look at the intraday graph of the Australian share market, this is what it looks like. And by the end of the session, we were at the highs of the session, above 4,860 points, and every single sector traded higher. So great to see some green on screen. I guess if there was anything, we did see the defensives underperforming on the market today. In fact, the healthcare space spending most of the session in the red, but by the end in the black as well. But defensives underperforming. Instead, we saw some of the growth areas like the industrial and the consumer discretionary stocks really outperforming. But really, markets are going to be all about the FOMC meeting tonight, and I think that's the key to the direction in coming weeks.
Yeah, particularly the impact it had on our market today.
I think the really good point around iron ore is around what's happening in terms of China. And since 2011, we've really seen Chinese growth coming off the boil. And in fact, in 2013, rather than stimulating the economy, we've actually seen the opposite, where we have seen policies concentrating on clamping down on excess in the Chinese economy. And so that's really put a bit of a dampener on commodity prices. Overnight, we did see a bit of a rise in iron ore, which was positive for our market today. The price was up by 2.3% at $117.70 US a tonne, and that was helped along by the rise that we've seen in the Shanghai steel rebar prices. So I think part of that is we are seeing a restocking from steel mills, and that's been a positive, but overall the demand has still been quite weak there. I guess it is the highest price that we've seen in around about 3 weeks, since the 28th of May. But coming to that iron ore space and the commodity space, one of the important reads that we're going to get this week outside of the FOMC meeting tonight is the HSBC flash PMI numbers for June. This is the first read that we get into the manufacturing sector in China in June, so it's one of the earliest reads that we see. And the expectation is that we'll see the number stay steady compared to the previous month, so at 49.2. This is an important number because the jitters around China are increasing at the moment. We know that China has been increasing debt, and its debt levels as a percentage of GDP have risen from 125% a few years ago to be around about 195% now. So a lot of jitters around China and the policies it has, and of course that has a big flow-on effect for commodities. But overnight, that price action in iron ore and the fact that we're seeing prices at the highest level in 3 weeks having a positive impact on iron ore plays. Atlas up by 2% today, Fortescue up by 1.8%, and Rio Tinto up by 1.6%.
On Whitehaven, obviously the big news today in regards to Nathan Tinkler's holding evaporating really in Whitehaven. What did you make of that, and in particular the outlook, if you like, for Whitehaven?
So for Whitehaven, this is a positive because Nathan Tinkler's 19.4% stake had really put a cap on Whitehaven Coal's share price, and the fact that now we've seen that lifting, it has been good news for Whitehaven shareholders, and the share price up by 4.3% today. I guess if we have a look at Whitehaven Coal, it is a single commodity play. It does deal in both metallurgical and thermal coal. And if we have a look at the difference, metallurgical coal is used in steel production, whereas thermal coal is used for electricity. And in terms of the thermal coal market, what we are seeing is excess inventory at the moment, and that's really depressing prices. And of course, metallurgical coal, we know what's happening in terms of steel and iron ore pricing, and that's really having an impact there. In terms of Whitehaven Coal, I guess the positives or the catalyst for this share price to move further upwards comes when we see positive repricing of coal, or when we see the development of Maules Creek. It's probably the most prized asset in the portfolio of assets that Whitehaven Coal has in that Gunnedah Basin. Now, there is a $1.2 billion facility in place. This is a 4-year facility. So in terms of funding, that doesn't look like it's an issue. But I guess we do want to see development of this Maules Creek asset over the next 12 to 18 months. And if we do see that coming along nicely, then we could see a re-rating of the stock. But for the time being, the depressed nature of coal prices, Nathan Tinkler stake, these are all things that have been holding back Whitehaven Coal. Today we saw a bounce in shares up by 4.3%, and I think we just need to see a few more positives, either in terms of the coal prices moving upwards or in terms of the development of Maules Creek.
And Julie, I also wanted to get your thoughts, continuing the theme of corporate news. News Corp, the two sides of the split, when that does happen, actually came online around midday today.
We saw New News Corp coming online, and the old News Corp will now be called 21st Century Media. And if we have a look at these two businesses, the core business will remain in 21st Century Media. And if we have a look at the core businesses, these are the high growth assets. They're looking at the cable business, the movie business, most of those assets which are in the US. Now, the New News Corp is mainly the Australian publishing assets, so the Australian newspaper making up about 63% of assets. We'll also see the newspaper assets in the UK and the US rolled into this vehicle as well. We'll see the Harper's Collins publishing arm also being rolled in, and then the stake that New News Corp has in REA Group, which is the real estate online group, a 50% stake also in Foxtel and Foxtel Sports, and we'll also see the digital educational company Amplify being rolled into this unit. So altogether, in terms of this unit, there are some exciting businesses in there. For example, the Foxtel cash flows and revenues, they're quite strong. REA Group as well, we predict quite strong growth coming out of that business, which New News Corp will own 62% of. However, it's the publishing assets and the newspaper assets which are of a concern. Not too long ago, we heard of a write-down, $1.2 to $1.4 billion to these assets, and really trying to turn around this business is probably going to take a while. So the concentration is probably going to be in terms of cost cutting in this business. So New News Corp coming online today, we did see a range between $14.34 and $15.35 today. The shares closing at $14.50 after opening at $15. So all in all, I guess an okay debut in terms of the market, but really we're going to be watching the strategic direction now that these assets have been pulled out of the core company.